Well, it's tax time again, and we thought we'd provide you with an update on some of the recent changes and also revisit the requirements for several key tax deductions. For many of these items, we've already had questions this year from our clients who sent their tax information in. The majority of us experienced some form of working from home during the 2020 financial year due to the COVID-19 restrictions. You may have been aware that there is a flat rate, 80 cents per hour, that you can claim from 1 March 2020 until 30 June 2020. And this seems attractive compared with the previously available 52 cents per hour method. Provided you've kept good records, the 52 cent flat rate plus actual other claims may give rise to a bigger deduction than a straight 80 cent per hour flat rate claim, so keep that in mind. Your ability to earn an income is one of your most important assets. You'll likely be aware that you can take out an insurance policy for income protection insurance, and this is something most of our newly qualified dentists will often grapple with as they weigh up the cost of the premium against the benefits provided. You should be aware that the premiums paid for income protection insurance policies are likely deductible to you. So, not only can it be an important choice in terms of risk reduction, but you can claim the premiums against the income you're insuring. Let's talk about self-education. The key requirement to consider here is the connection between the course or module studied and the income you earn in that year. You can't claim the cost of education that relates to a future role. With respect to conferences, although the number of conferences reduced significantly over the last 6 months of the year, you may still have attended some conferences in the earlier part of the year. So, you can claim the cost of attendance, travel to and from the conference, and the accommodation cost if you needed to stay away. As always, you need to adjust for any private portion of the trip, so you only claim the business usage. Now, with investment properties, remember to keep track of all income received and any expenses you pay, such as council rates, insurance, and agents' fees. The two deductions often overlooked are the interest charged on your loan account and possible depreciation. It's important to speak to an accountant about that because both of these items have specific rules around what you can claim. Another trap that's often overlooked is the impact of capital gains tax. So you need to keep very good records about any periods you move in and out of the property over its lifetime, as it's likely there will be capital gains tax implications. You can claim the cost of using your motor vehicle for work or business purposes, and there are two methods: the cents per kilometre method with a limit of 5,000 kilometres and the logbook method, where you claim a portion of actual car expenses. Now, this is limited to you driving between places of work or work and study, and it doesn't include the travel between home and the practice each day. We also caution against attempting to claim the 5,000 kilometre limit each year. Not only is the ATO often sceptical about claiming up to known limits, but they also know that much of the country actually worked from home for a large part of the last financial year. Also, just a reminder that you can claim the cost of memberships for professional associations, such as ADA membership, subscriptions to journals, and indemnity insurance premiums. Remember these key points in order to claim a tax deduction. You must have spent the money yourself. It must relate to you earning your income. You must have a record of the expense and be able to show that. You can only claim the work-related component, not the private portion. And this is particularly important for going away for conferences and the like. As always, please don't hesitate to give one of our WealthStart team a call if you have any questions.